What is up, everybody? Welcome back to another episode of Bitcoin and Markets. My name is Ansel Lindner, and today is the Bitcoin Fundamentals Report day. So every Monday, I put out a free newsletter, and that goes out to all subscribers over there on bitcoinandmarkets.com. It covers Bitcoin news, Bitcoin price, Bitcoin mining, Lightning, macro news, everything. So we're going to go over that here today, walk through that. And if you want to subscribe, go to bitcoinandmarkets.com and subscribe. It is Monday, so hope you guys had a great weekend. Hope you are all doing well out there. I had a busy weekend with some of the preparatory things before going down to Miami. So I'm looking very much forward to going down to Miami, being down there on the news desk on the first day, opening up the conference. I think it's a great opportunity for this show and for my content, but also just to be part of this epic conference every year. This will be my third one, and they just keep getting better and better. I remember 2 years ago when I went down there, it was at a different place across the, I don't know, what would you call that? Across the water from Miami Beach on the mainland side. And I said to myself, Bitcoin has arrived because it was such a big deal. We were past the fire codes, just packing a stage with 5,000 people, watching. And so it was pretty awesome. And then last year, it was 10 times bigger than that. So last year really was like, holy cow, this cannot be stopped. This is a snowball. And that's one reason, too, why I think a lot of people that went to the conference, that have been in Bitcoin for a long time, they saw the conference last year and they saw the price, what was going on. And I think they just expected more out of that bull market. But anyway, this is great timing for this year. The bull market is pretty much here and breaking out right when we have all of these great presenters there in Miami with RFK Jr. and Tulsi Gabbard. There's a ton of politicians coming. There's also a ton of industry people coming. Macro people. Zoltan Pozsar is going to be there. He is one of the guys that I point out how wrong he has been, but he is very famous macro analyst commentator in the world. So probably the most famous right now. So he's going to be there. There's all sorts of stuff going on. And yeah, if you guys are if you're in Florida or if you're within driving distance of Florida, it's well worth just coming down to see the conference. Maybe not buy a ticket. Maybe next year buy a ticket if it looks like something you want to do. But it will definitely, you'll be surrounded by Bitcoiners there in Miami Beach, and it's a good time. Usually, I mean, it's very cost effective for me to go down there because I'm hooked up with Bitcoin Magazine, and it's driving distance. It's only 4 hours from my house. So that's one of the benefits of living in Florida as well. Okay, so what you're seeing here, excuse me. What you're seeing here is bitcoinandmarkets.com. This is the home for all of my content. I put out that free weekly newsletter every Monday. And then usually once a week, I'll put out a premium newsletter that's still relatively in its fledgling stage. We'll see. I've put out 14 of them. We'll see how that goes. And you see 14, that's not really fledgling stage compared to, or that is fledgling stage compared to 240 of the other weekly newsletter that I do, but it is still new and I'm still getting my feet under me for the premium pro members. You can see the selection up here in the menu. But if you want to support my show for as little as $5 a month, you can become a member at the website. That helps me produce the show and put on this and keep this going over all of these years. So Bitcoin and Markets was the first macro podcast in Bitcoin, and it's still going today. But anyway, let's take a look at the fundamentals report, number 241. I did drop this into the Telegram group. So the Telegram guys, they can listen, but they can't see what my screen. So I just have to fill them in every once in a while with what's going on. Okay, so at the beginning of each newsletter, I have quick links and then a snapshot of Bitcoin in this table. And I think this is a very broad brush of what's going on in the Bitcoin ecosystem. Price is everything. Statistics, numbers really are everything. There's a lot of people out there that second guess what the numbers are telling you. Try to, I mean, I do this too. I guess everyone makes the forecast, and then if it doesn't work out right away, you don't want to throw away your forecast. But after maybe like 5 years, you got to think about reevaluating your fundamental thesis of what you think is going on in the market. But numbers are extremely important, and you can't always just poo-poo the numbers. If, for example, in the oil market, which I talk about quite a bit, if the price was 120 a barrel and you called 200 a barrel and it fell, you would be exactly wrong. And it doesn't matter. You're not waiting like there's some market turmoil or some disruption in the market that, oh, it dropped to 60 over 18 months. No, it dropped to 60 over 18 months because you were wrong, right? And so the numbers are extremely important. And you have to look at the numbers and be humble enough to change your opinions. And that's one thing I do constantly on this show. But okay, so the general trend for Bitcoin is it's attempting to bounce this week. The media sentiment, I have moved it up to neutral. This is not scientific, just my kind of own gauge of the market. We have seen a lot less negative stuff out there, especially if you discount the SEC negativity, around Gary Gensler and crack down on all the scams. If you discount that, it's definitely neutral right now. And we will see this is building into the Bitcoin conference. So that's very interesting as well. Okay, network traffic is extremely high still, but we'll cover that. It's actually getting a little bit, fees are going down. Mining industry is stable. Weekly price is down about a little over $300 from last week's report, 1%, but it's been very, very stable over the last couple months. You'll see this on the chart. It's just really the stock market and Bitcoin have both been flat for over 30 days. So the market cap holding on to that $500 billion level. Satoshis per dollar, 36.40. One Finny, which is my denomination that I've coined, it's 1/10,000th of a Bitcoin, right? And smack dab in the middle of the decimal places, right? It's $2.75. Mining sector, previous adjustment, negative 1.45%. Next adjustment is now positive, estimated to be positive. It was last week, it was estimated to be negative. Big surge in hash rate. We'll see a chart of that. And so it is now estimated to be 2%, plus 2% in 2 days. How much of that is extra income from all of the fees? Probably a lot. Mempool is roughly the same at 186 megabytes, according to mempool.space. Fees for the next block, $4.11. Median fee is $3.50. So about $10 per transaction less than last week. So this has come down dramatically. It's come down 2/3. Okay, Lightning Network. Bad week for the Lightning Network. Both capacity and channels fell 1.1%. And this is according to mempool.space and their Lightning numbers. But you can see these numbers here, negative 1.1%, both capacity and channels. And that is Bitcoin capacity, not dollar capacity. Okay. In case you missed it, I did put out the Market Pro for last week looking at credit creation and a deflationary impulse that's about to hit. Only got one of these live streams transitioned over to the podcast form. This is really the bane of my existence right now. It's hard for my schedule to get these edited and out. I thought it would be easier to, on these live streams, if I'm going 40 minutes, to cut the podcast version down to 15 or something like that, just get the important nuggets. But it's damn hard to pick which 15 minutes is deserving of getting on the podcast. So I don't know. I had to figure something out with that and change that up. But you guys can check out, if you're watching this, you can check out the YouTube channel. It's BTC Market Update. It's a new channel, relatively new, about 6 months old, maybe 9 months old now. And that has all these live streams from the past that I do, because I go out to YouTube. Also, the Rumble channel is doing a good job of directly copying from YouTube over to Rumble. So you can also subscribe on the Rumble channel and see all the stuff there. And I recently downloaded the Rumble app, and I don't know if this is new, how new this is, but I'm glad they finally have an app and you don't have to watch it in a browser. So anyway, FedWatch also last week with Bitcoin Magazine on Thursdays, 12:30 Eastern. Okay, let's get into the Bitcoin headlines. So last week, it was a massive news week last week, guys, with ordinals and all sorts of stuff. There's all sorts of infighting going on in the space. So there was a massive amount of Bitcoin headlines, Bitcoin news. And this week is just, there's nothing. There's not very much out there for Bitcoin. There still is the ordinal debate going on. We've seen a few things that I'll discuss here, but really this anticipation of the Miami conference, the SEC was in the headlines quite a bit, and we went back and forth a lot on the Telegram about Gary Gensler and Brad Sherman and how to think about this, because everyone wants to demonize Brad Sherman, and I think he would kill Bitcoin if he had a chance or if he could, but like not 100% of what he says is wrong. It's only if you apply it to Bitcoin. Most of what he says is going after scams and fraud. I watched an interview where he was in his office and he was just talking to some news host, and she asked him about, what does he think about all these things being securities? And he's like, well, the SEC has said they're all securities. And he goes, or the news host says, well, no, they said Bitcoin wasn't a security. And he dropped that conversation of Bitcoin. He didn't even talk about Bitcoin after that. He just went back to crypto and saying, yes, but most of them are, right? And so Brad Sherman even is having to admit here that Bitcoin is different. And the crypto crusade against crypto, hopefully it's going to just whiz right over Bitcoin's head, because Bitcoin is extremely insulated from this. But whatever, that was kind of a news headline this week. And I forgot to add the lastly, not perfect here on this, guys, but there's a ton of information packed in here. Okay, the Miami Conference 2023 is coming up. I will be there, of course, on the live desk, like I said. So join the live stream if you are not coming. The timing is spectacular. We already covered that. And my hope for the conference is, like I told you, 2 years ago, it was like Bitcoin has arrived. Last year is like, this is a major deal, right? And then this year, my hope is that we'll go away from the conference with a wedge that's driven more between crypto and Bitcoin. That's one of my big crusades this year and probably into next year, is driving this narrative wedge between crypto and Bitcoin. Okay. Inscriptions. They're still out there. They're still going on. There was a new thing this week about BRC20 staking. I do not know the technicals whatsoever of this. It sounds extremely dumb, but the hype has to keep evolving, right? Just like all of the hype in the altcoin space. The scam hype has to evolve, because once the scam is exposed as being completely worthless, you have to evolve and move that narrative, move the marketing to the next thing, right? This is an evolving scam narrative thread that we see going on here in the BRC20 already on Bitcoin. Okay. But they have slowed way down, and we will look at some of those fees and things. I guess there was a report of some inscriptions going missing from Ordinal's wallets. I couldn't find the original tweet that I saw this on, but it made it through my threads on Twitter, so it's probably fairly big news out there, but I couldn't find it again. I have seen a lot of references to that, though, over the last 6 months, that people are losing these ordinals. So I don't think it's anything new. It's just something that's not fixed. And it sounds kind of silly, to waste some money on a JPEG and then it goes missing out of your wallet. So, anyways, let's move on. Back and forth with Marty Bent. So, this happened this week just on our Telegram. I tweeted something out too, and maybe I should hold back a little bit more because Marty is a really good influence on the space. He's a good content producer. I don't have anything against him personally. I even think that how he handled this situation was very upstanding, and I think uh, says a lot about him. But I was speaking out about a tweet that he made for one of his episodes, and he used the word destroyed. So he said that the central planners have destroyed our economy. And I just pointed this out as being hyperbole. Why would you say that our economy is destroyed? Yes, government intervention is bad. Like, my take is very simple. I say here, my take is very simple. Government intervention is bad, but it has not destroyed our economy. And in the conversation, and we're back and forth a little bit with Marty, I was like, look at all these good things that have happened in the last few decades. At least you had to say that these good things happened despite central planning, which I agree. I agree with that statement. But then if all these good things happen, how is it destroyed? If you look up the definition of destroyed, it's like to end the existence of. So no, it's not destroyed. So anyway, I say it's damaging for two reasons to use this type of hyperbole. One is it's empirically not the case and will lead to non-optimal choices and behavior on our part. Now, this is a very scientific, unemotional thing. So if you have the wrong theory, you're going to make non-optimal choices. It's the same thing with the inflation narrative, which Marty also is a purveyor of. Is the inflation narrative is just wrong when you look at it empirically. And so it's going to lead you to make suboptimal. I guess I should have said suboptimal. I don't know if non-optimal is a word now, but suboptimal choices and behavior. Number two is that it makes us look like we're in an echo chamber because it is empirically not the case. If we were saying something and preaching something from the rooftops and it was the case, then that's different. When we're not in an echo chamber, we are grounded in reality. But when it's empirically not the case, and yet we say it, not only will we act suboptimally, but we also look bad. Like, we look like we're in an echo chamber. And I've lived through this for many years because I was a gold bug for 15 years before finding Bitcoin 10 years ago. So this is the same sort of thing that happened in the gold bug community. And one reason why I ended up having to leave. I don't think I'll have to do that for Bitcoin because it's much more active, much more like gold is passive, where Bitcoin is actively building the future, right? So I don't think I'm going to run into the same thing here, but I'm definitely running into the same hyperbole and the same narratives. And then people have to continually make their conspiracy things more complex to explain that it's empirically not the case. Why is it empirically not the case that we've had 300% inflation in the last 10 years with all this QE? Well, it's because insert your complex conspiracy. That's very bad for the growth of not only your personal understanding and your personal wealth and prosperity and things. It's also bad it's a bad look because it's just wrong. Okay. So anyway, but I think, again, I prefaced it saying Marty is a great influence. He's a great guy. He's interviewed me once before, and it's been, he's never been anything but nice. I've never heard anything but good things about him. And this isn't about him personally. It's about like strategy. This is a strategy conversation here. So anyways, let's move on. U.S. Chamber of Commerce comes out in support of Coinbase. And I read through this on Friday's live stream. So the U.S. Chamber of Commerce is the largest, the largest business organization or foundation of, you have to have a membership to be part of this Chamber of Commerce, and it's a private business there in Washington, D.C., and it's the largest of its kind in the world. So that's interesting. I don't know exactly how they measure that, maybe by revenue of all the members or something, but they are on the side of fraud here. And it is one big legal filing full of whining, I say. I'll pull out 3 claims from this briefing here. Number 1 is they claim there's no clarity, or there's the no clarity argument. They can't, everyone, all this, the fraud, fraudsters and scammers, they all say that there's no clarity from the SEC, but that's just wrong. Gensler has been very clear that Howey test applies, and that the SEC has clear laws and precedents here. So these scammers just don't want it to apply to them. And so they say, wait, we're different. Those can't apply. Clarify. We're different. Clarify. And he's like, the Howey test applies. And they're like, whoa. We're different. Clarify. So there is no clarity problem here. Now, Coinbase also, so that's on the altcoin side, the actual specific token side. Now, Coinbase is a business though, right? So they don't have a token that I know of. They don't have a stable token for Coinbase, do they? Like Binance and stuff. But anyway, Coinbase, they sold unregistered securities as a business model. They even built a whole education course teaching false information about blockchain and calling pure DeFi scams as legit innovation. They're the bad guys, okay? Coinbase is an enemy of Bitcoin. They sold unregistered securities, knowing damn well they're most likely unregistered securities, that they were most likely going to have the Howey test, and yet they did it. And not only did they sell unregistered securities, but they pumped out false information about how great they were. They're the bad guys. Okay, this is going to be bad. This is going to turn out very bad for Coinbase. Very bad. I mean, they have billions to fight it, so we'll see if they get a slap on the wrist or something. But I have a feeling this is going to turn out bad for Coinbase. They have Ripple on one side for the altcoin example, and now they're going to have Coinbase on the other side as a business exchange example. It's going to turn out bad for them. Okay, number 2, innovation will go offshore. That's another claim that you always hear from people like the Chamber of Commerce that are backing Coinbase and the fraud. The answer is, what innovation? You just need to ask them, what innovation is there? In their whole Chamber of Commerce thing that they had one innovation, and that was to bank the unbanked, which is okay, fine, but you're banking people that most likely will invest in scams or get scammed out of their money. I went into that on Friday. I don't want to go into it more here. But there is an odd chance that they might have something for you, like what the innovation actually is. Like I saw one guy during the testimony in front of Congress, and he was saying, oh, there's all this distributed video. There's a distributed video protocol now that's doing all XYZ. Okay, well, if they say something like that, the next question should be, why do you need a token? What's the innovation? They most likely won't be able to answer, but if they do, the next question is, why do you need a token? And there's no reason. There's absolutely no reason. The reason you need a token on Bitcoin is to keep the decentralization intact. You incentivize proof of work, which is the only way to keep distributed consensus, period. But in these altcoins, they're all centralized around a certain party. That's why they're going offshore. They wouldn't have to go offshore if they were decentralized. So anyway, so there's no productive innovation in crypto. And that's one of the things I was talking about Brad Sherman as well. I mean, this could be written by him. I'm just making sure to separate Bitcoin, which he won't do. But I say Bitcoin is a different story. The innovation is decentralized consensus and digital scarcity. Okay, number 3. So this is still going on. The U.S. Chamber of Commerce in their support of Coinbase, they're filing with the SEC. And this is one of the claims that I just pulled out. There is harm created by the SEC delay on clarity. Answer: there is clarity. You just don't like it. There's likely much more harm caused by the scams. There is some innovation happening, but it's innovating new scams, new types of scams. How many billions went up in smoke last year just to just a few major scams in the space? So, what is the harm? There is not a lot of harm to Bitcoin right now. It's very hard to quantify if there is harm, but the SEC action here, one, there's clarity, and two, how do you calculate the harm? I would think it's less harm going on because there's less pump and dumps. There's less false information and false narratives out there and scamming and fraud going on. So what's the overall harm? It's very hard to quantify. Very hard. Okay, enough with that. Let's go on to some macro headlines. PPI, CPI, and SLOOS came out this week. It was a big week for numbers. The CPI came in marginally below expectations, and the PPI continued to crash. So CPI tends to follow producer price index because, that's, you can think of PPI like wholesale and CPI like retail. So the wholesale prices will move, and then the retail prices will move. And it's also sticky. Producer prices are less sticky, I would say, than retail CPI prices, because the root of all the prices, commodity prices or whatever, as those things come down, then those people, the suppliers that sell to the wholesalers or to the, sell the intermediate goods, they can adjust their prices down because commodities prices are falling. So their prices will come down first, and then the CPI will be more sticky because I've talked about this in the past. CPI is sticky because it's harder to give someone a wage cut than a wage increase. It's harder to lower your prices on inventory than raising your prices on inventory. So usually prices are sticky for that reason on the retail side, but they will come down. So they usually follow PPI with a lag. Now PPI is all the way down at 2.3% year over year. My call and Hugh Henry and some other people that I'm watching that, I'm a fan of in the space, they're calling for year over year inflation to be at that 2% range by July. I think that's very possible. I also think it's possible to be negative at least several months in the rest of the year. So anyway, that's what I'm seeing from CPI and PPI. Now, SLOOS is the Senior Loan Officer Opinion Survey put out by the Fed, and they showed more tightening of lending standards and crashing loan demand. Remember the interest rate fallacy. As rates are rising, that means money is loose because demand for loans is going up. Demand for loans is going up because business is good. The bank knows business is good, so they loosen their credit standards. More people want to take out loans because they expect high profits in the future. Now, when rates are falling, that means the opposite. That means business is bad. People don't want loans. They're tightening their belts, and banks don't want to give loans. So it's not that people think that lowering interest rates is stimulatory to the economy, but it's not. Lowering rates signals to the economy bad times. Now, the reason why you might think it's stimulatory, and you might hear things like, oh, there's a big lag to our monetary policy. You hear that from the Fed all the time. There's a lag. There's an 18-month lag. There's a 24-month lag sometimes. Well, why is that? Because it takes that long to just work through a kind of a slow period and start going back up again. the economy. Like, think about the panics before the Fed, right? The panic of 1907, or go back into the 19th century. I don't know all the years and stuff, but those would last those would be very brief, 6-12 months. You'd have a panic, it would be over, and you would return to growth. So that's the natural cycle. The bad times are bad, but then they turn around really quick. So that's why there's a lag in the Fed stimulus, the Fed monetary policy, because that's how long it just takes naturally to turn around. The Fed really doesn't do anything mechanically. They are just following. So low rates are not stimulus. Low rates are telling people that there's bad economic times out there. All right. If you cross-check this data with regional bank failures and things like the oil price going sub $70 a barrel again, we get the clear picture of an economic slowdown, recession. The question is, does quote unquote inflation drop fast enough to keep real GDP positive? I think it might. And that goes back to, will we have a textbook recession? I don't think so. I think there's a chance that we don't. Much higher chance than most people think. I'm putting it still at about 25% that we don't have a textbook classified recession. But anyway, let's move on. Okay, breaking today, Fed manufacturing survey is crashing. After the stunning, surprising upside surge in April, the Empire Fed manufacturing survey has collapsed back to reality in May, crashing 42.6 points to negative 31.8. Dramatically worse than the negative 19 that was expected. Outside of the COVID lockdowns, this is the biggest month-over-month drop ever. So U.S. economic activity is slumping. I saw a chart and shared that in Telegram this morning. I didn't put it on the report, but German manufacturing is falling off a cliff. It's looking like 2008 or worse. So yeah, a lot of the manufacturing is falling off a cliff. But remember here, this is from a nominally high place. By nominal, I mean measured in higher prices. Like if you get, well, just think of it this way. GDP was very high in 2021 and 2022. Nominal GDP was very high in the first half of 2022, like 10% annualized. The problem was that inflation was also high. So to get real GDP, you minus inflation from nominal GDP. So nominal GDP was screaming higher. We were actually having, on paper, we're having very big growth. Now, when you take that away, that's going to feel bad. Like you take off 10%, that's going to feel really bad. But it's coming from a much higher place, okay, nominally, the way it's measured. So it feels worse than what the numbers will show. All right. Next thing up, I have a bunch of charts here, and I think we'll actually go through this article. Should have time. I have about 15 minutes here before the next my next appointment. So China housing rebound fizzling shows risks to economic recovery. And I just pulled out a few quotes here from this article on Bloomberg, and it's new home purchases in 40 major cities tracked by data provider China Index Holdings were 22% below pre-pandemic levels in 2019. Now, when you think about an economy like China that's supposed to be growing in the high single digits, 7 to 10%, right? Yet now they have new home purchases are 22% below 4 years ago. That's huge. That's absolutely huge. So, but that's new homes. In the first 4 days of May, which is kind of a weird way to measure this, but I guess they measure it daily, But in the first 4 days in May, Secondhand residences, so not new, existing homes, sales plunged 44% by area from a month earlier by area, and I'm not sure exactly what that means. But let's take a look at a few of these charts here. So, did I share this link with Telegram? Let me check. I did not, but it is in the report, guys. So if you go click on the report link, you can go and find that as well. But okay, let's get back to this. China's holiday new home sales weaker than pre-pandemic levels. You can see at the bottom here, all major cities combined negative 22% from 2019. And if you compare this to the last 3 years, it's down 23%. So pretty crazy. Let's look at the next one. Home sales weaken faster than existing homes, or sorry, faster in existing homes. And you can see down here in the blue, this is May month to date, negative 44% from 15 major cities. February was kind of an aberration. It popped up 60%, but now it is, back down, falling. And again, remember, in credit bubbles, you're either growing or you're collapsing. And so this is not good at all for the Chinese real estate. Being such I think it's a third of their GDP. It's 70% of household wealth is tied up in these things. Most families have 2 residences. It's hard to get a wife if you don't own property. So it's the cultural relevance of the Chinese real estate market is extremely important. Extremely important. Sorry about that. Okay, price widened again among existing homes since March. So in the dark blue or black, it's new homes month on month, slightly positive here. And then existing homes month on month. And you can see existing homes. The existing homes seem to lead a little bit as well. If you go back to May of last year, it started going negative while new homes were still positive. Then everything kind of rolled over. So perhaps this leading here. If you guys are new to my stuff, I am a big China bear. I don't think there's the whole worry about China being the largest rival of the United States is completely overblown. Okay, here's China's housing inventory remains elevated. And sorry, these are so small. Let me check that's hard to see, but I can't make that any bigger right now. So China's housing inventory remains elevated. Everyone's trying to sell. There's not very many buyers. So what's going to happen to the price if supply goes up and demand goes down? China's mortgages slide in sign of weak buyer sentiment. These are individual mortgages, change in outstanding loan balance from a year earlier. And this is definitely a change. Okay. If you look back here, going back to 2013 on this chart, there's some crazy action here in 2015, 2016, but really this is a general trend upward. And I bet if you went back in history, that general trend would be running for about 20 to 30 years. But this is different at the end. Starting in late 2021, really has just fallen off of a cliff. Okay. Property investment decline deepens again. Monthly change in China's investment of real estate development year over year. You can look, it's been negative since mid 2021. Does not look good. No signs of construction recovery. So this is excavator sales in China. You see it kind of had a spike here in early 2021. But and that might have been with some, pandemic rescue package. They had, maybe some companies had a bunch of money, and so they went out and bought excavators. But it's been very, very low since, and seeming to continue to decline. All right, that was it for those. So China is in a bunch of trouble. Let's move on to the next section, and this is price analysis. Of course, I do my Bitcoin Market Pro. That comes out roughly weekly, but I usually have a dozen charts or more looking at all sorts of things in Bitcoin, all sorts of indicators. I make forecasts and even some sort of, I don't pick stuff, but I do say, hey, it's probably time to go long bonds. It's probably time to go long Bitcoin here or whatever, right? I make like specific calls in those newsletters. So check that out. You can get your first month free at bitcoinandmarkets.com/pro50. Okay, last week I had this red box on here and I said that there's several important support levels and they're coming together in this red box, most likely placed for a bounce. And let's see how that worked out. Obviously, it worked out pretty good, just bounced right there in the red box, just below $26,000 for the price. And at time of writing here, it was up to 27,434 when I took that snapshot. We have a bounce. Now, whether or not this is the bounce that will take us back to the red band remains to be seen. 29,000 is emerging as an important level to crack, to bring this back into imminent bull territory. Going into a big week of Bitcoin announcements at the Bitcoin 2023 conference, I think the chances for breaking out are higher than the chart leads us to believe. Overall, the downside is still limited, in my opinion, with a stop loss level of 26,000. Any major dip here would be an excellent opportunity to buy the dip, not investment advice. The stock market is flat and boring. So let's go on to the stock market. I should have put a small headline there or heading here. The stock market is flat and boring. The economic numbers are on the bad side, but the crashing CPI is keeping things on the level. That was my main forecast for this year, a race between crashing CPI and crashing nominal GDP. So far, 30 days at this level for the S&P 500. And if we go back up here to Bitcoin, I mean, we've been here since March 10th, remember, was this bottom. And so we've been in this zone since, what would that be? About the 17th of March. So we've been here more than 30 days. Stock market has been here for 30 days. Very interesting. The boat is lopsided right now. You know what happens when everyone is on one side of the boat? It flips. Small investors are the most short ever, all waiting for the most anticipated recession in history. We could be about to see a major short squeeze that will disappoint all the bears. And so, yeah, this is interesting chart that I shared this morning on Telegram, showing that small speculators, they are loading up on short positions. Oh boy, that looks tasty for the big money interests. When they see something like this, that looks tasty, guys. I can see them trying to squeeze those shorts. We are currently on the backside of transitory. And this is one of my big pet peeves, I guess. I don't know. Everyone making fun of people for calling CPI transitory when it was obviously going to be transitory. But now what we're experiencing is the backside of transitory. So how do you predict the front side of transitory? Well, people predict it by saying $200 a barrel oil. That didn't work out too well. So now we're on the backside of transitory, and it's not easy to predict what's going to happen with this market. We are currently on the backside of transitory, meaning CPI and easy money is over. A return to the deflationary pressure is here, and the Fed will pivot. I'm not calling for a pivot necessarily in the next meeting, but its chances are much higher now. Everyone laughed at those preaching the transitory deflationary truth the whole time. Now they are seeing what it means to have a credit-based system. This is truly the best possible situation for Bitcoin, in my opinion. And that's hard to square because most people think, oh, Bitcoin is an inflation hedge, which it is, but Bitcoin is also a deflation hedge. And you saw what happens in, during times when there's a bunch of quote unquote money printing and stuff, when there's a flash crash during COVID, Bitcoin dropped as well. Bitcoin does very well during these kind of long deflationary pressure times that we've had since the great financial crisis. These have not been inflationary times. There's been small amounts of inflation, but there's the overriding force has been a deflationary credit pressure, pressure towards credit collapse, a pressure towards credit bust, a pressure towards bank failures, a pressure towards all of this stuff. That's where the pressure has been. It hasn't been on the inflationary side. Even during the high inflation time or high CPI times, that was transitory because we have a credit-based system. Okay. So this is truly best possible situation for Bitcoin. A return to a deflationary pressure to the economy will force the new money into narrower points in the economy. This is where we get asset price inflation from. The rest of the year, we should see rates falling naturally, making housing more affordable. So housing prices should go up. This and also rates will go down, meaning bond prices will go up. So we'll have bonds going up, housing going up. This will also be a bad environment for starting or expanding a business unless you are a large, well-known brand. So expanding a business, large, well-known brand. Focusing credit into them and having the large companies lead a rebound in the stock market. So the stock market should go up as well because money is going to be focused on the large companies. It's no wonder why the FANGs became so popular. Why the FANGs were the ones where all of that. Remember, it was something like 75 or 80% of all stock market gains were gained by the FANGs for several years. That's not a surprise because during a deflationary pressure time, money is focused into those large companies. They're better credit risk. Okay, that is what we are looking at. It's no wonder the FANGs were outperformed. These large companies are going to outperform again, and that's going to pull the stock market higher. So we have higher bonds, higher housing, and higher stock market, and higher Bitcoin. Why? This also leads to the world. Oh man, I messed that up. This also leads the world toward a monetary substitute as the dollar shortage squeezes people everywhere. A path that leads right to Bitcoin. So yeah, it's a monetary substitute. It's a monetary alternative. In a deflationary pressure period, you are searching for monetary value. You're searching for robust economic activity that is going to be happening in a place where there is an abundance of monetary value there. So that's why people go into Bitcoin during these deflationary periods. Plus the counterparty risk. If there's banks failing, if there's bad risk out there to hold your deposits in the bank. I mean, some could say it's financially risky to hold Bitcoin, but you're not going to lose 100%. It's not going to go to zero, at least not in any brief period of time where if you're holding deposits in a bank, they could be frozen tomorrow, right? So anyway, that is the price section. Let's keep on cruising. I just have a few minutes left here. Mining headlines. China may be back in the mining game. I saw this week. China shut off mining, but turned it back on while no one noticed. We have to also take this into context of Hong Kong trying to open its doors to Bitcoin once again, as reported several months ago now. Many people are saying this is yet another piece of evidence showing that Bitcoin mining is becoming a geopolitically important industry, and I agree with that. We have Russia, the US, and China all competing on Bitcoin mining and all cracking down, at least cracking down in word form, rhetorically on Bitcoin mining. So we'll see how this develops. Next news for mining is tiny Bitcoin miner plays a lottery. And I think, of course, we've always been able to do this, but it's just a great way to frame this, right? This tiny Raspberry Pi Zero does get a little bit of support from an Antminer, a USB peripheral, which is optimized to run the SHA-256 hashing algorithm and solve the complex mathematical operations needed to quote unquote win the round of Bitcoin mining. There is no reason other than extreme statistical improbability that a single one can't work on its own. So again, this is a great way to frame this. It is like playing the lottery in a way, but also adding support to the Bitcoin network. And I can see people doing something like this. You could even give these away as gifts, like give them away because these have the Wi-Fi on them. You just hook it up. You tell, hey, just plug this in, and maybe you'll win. It's like buying people lottery tickets. I know my wife, at least, and like her girlfriends, when they give each other a card for something, they usually throw like a little bingo card in there just for fun. And this could be something like that from a guy's perspective, right? You give your bros a little Bitcoin miner lottery ticket. All right, hash rate. Let's open this up. Sorry, I'm yammering on and I'm up against my clock now. So you can see we have spiked up a little bit here in hash rate. Estimated difficulty adjustment is going to be 2% in 2 days, probably from all the Bitcoin fees that we've had, the transaction fees. Mempool, I thought this was interesting. So you can see the mempool had some, the rainbow slices were very thin, and now they've spread out, and the most expensive transactions are no longer there. And that's one reason why the fees have dropped by 2/3 in the last week. But the Bitcoin network should chew through these. We'll see how the ordinals go over the next couple of weeks if people continue to mint them. All right, what we have for Lightning Network, Jack Mallers was interviewed by CoinDesk. Jack is pressed on the recent ordinal controversy and the scaling of the Bitcoin Lightning Network. He answers in a familiar way to people familiar with my positions. Lightning Network is working and will continue to evolve with demand. Specifically, he brings up channel factories and using Lightning with stablecoins or sidechains. I think the mixing of Lightning with sidechains is an excellent concept. This is not an altcoin because it uses Bitcoin as the monetary unit. No need to print your own token and be an unregistered security on Bitcoin with real innovation. Lightning Network capacity and channels both declined this week. In my opinion, the real reason we saw a noticeable drop in both Bitcoin capacity and the number of channels this week for Lightning was the high fee environment. As pointed out last week, this is still a problem for Lightning when it comes to opening and rebalancing channels. The cutting edge development is happening exactly on these problems. It is only a matter of time until we see channels opening from liquid during high fee periods, and if fees remain persistently high, which is necessary long term. And that is the end of the report for this week. Guys, thank you for joining me. My name is Ansel Lindner. This is Bitcoin and Markets. Check out bitcoinandmarkets.com. Sign up for the free weekly newsletter. Join me here Monday, Wednesday, Fridays for live streams. I don't know how the live stream schedule is going to work this week, being down in Miami, but I will be live on the news desk Thursday morning down there from the Bitcoin conference. So check that out. Make sure you guys are watching the live stream. If you're not going to be there in person, also hit me up on my DMs on Twitter or on Telegram if you are in the Miami area and you might want to, meet up at the conference or something. But anyway, guys, that's going to do it for me for today. Thanks for joining, and I'll see you on the next one. Bye.